that's how we've shaped up for the day. 0.7% lower, not a bad expiry. 170 odd points lower on the Nifty. But the IT index is down 1%. And one of the reasons for that is the kind of move on HCL Tech. HCL Tech down 4.7 odd percent. TCS though holding up very well for itself, 0.75% higher on a TCS. So that move really reflecting. The Nifty Bank also was a tough one today. Pretty much all stocks in the red except Union Bank. That's the one that's puzzlingly so stood out and done very well for itself. Pharma, or done rather reasonably okay, just about in the green. Pharma has been the other one which has really stood out. Biocon, Divi's, Sun, JB Chem, Mankind, all of them up 1%, and that's led the Nifty Pharma index higher. Also, the breadth on the Pharma index was very different from the market breadth, so that's the one which has stood out. Metals too, Nalco, Hindalco, and the like. You've got some buzz around the China demand sustaining going forward and in fact accelerating, as a result of which you saw some very decent moves on an Hindalco, on a Nalco up 2.5%. You're seeing some of those moves play out. Last off, I want to quickly flag off from the 500 bucket. There were quite a few buzzers while the tilt of the market was largely negative, 1:3 in favor of the declines. I want to quickly mark out some good stocks which have stood out. Concor 6%, Nuvoco up nearly 7%, Adani Power, MCX, Welspun Corp all up 4% plus. Kalyan is the other one, 4% higher on Kalyan again. Eclerx, SBI Cards, you saw some decent moves on card trade as well. All of those stocks did very well in a market which was otherwise fairly weak. Kunal, expiry day done and dusted. Not too much damage, frankly. 170 points is, we would have taken it had we gotten to know in the morning that it's going to be 170 points. We would have largely taken it, right? It was a tough morning, 5% higher on crude. There were negatives, plus there was expiry as well. Didn't see any of that translate. You believe 24K being held is a crucial positive?
See, 24K is something which is a pivot point for the markets. We've been swinging around this level for the last many days. But the real damage for the index could start off once we break below that 23,750, 23,800 mark. That's the 50-day moving average. That's also the previous support from where we bounced off, in the previous week on that Wednesday sell-off. And also, I think more importantly, it's where the indicators will start to come back into a slight negative territory. I'll not call it a bearish territory, but a slight negative territory for itself. So that's, I think, the more important support level to watch out for. Right now, we are in that zone where it's more the options adjustment, which is happening for the last, I think, 2-3 weeks, where you're seeing the Nifty broadly into this range, 24,000 plus minus 250 points. So no major damage for the index. Hopefully, if we see a recovery of sorts from the global markets after the last few days of sell-off, then maybe that could probably aid the move on the slight bounce back further. But again, no major signs of a trend which is emerging on the index at large.
Okay, so that's that, at least for the day of trade this Tuesday. Thank you so much, viewers, for tuning in and staying with us. It's a goodbye from all of us who puts this show together. And thank you so much, Kunal, for joining us this afternoon.